Kitco Mining's special coverage of Xplor 2023 is brought to you by Radisson Mining Resources.
Welcome back to Kitco Mining's ongoing coverage of Xplor 2023 in Montreal. My next guest is Peter Krauth. He is the author of The Great Silver Bull, also editor of silverstockinvestor.com. And he's going to give us a sense of where silver is at and where silver is going. We've had a lot of changes since we last spoke, so we're going to get into that. Some structural changes on the gold side, some structural changes and some updated numbers on the silver side. But first, just to give us a sense of where we're at in the broader economy, we still have inflation very high, around 3.7% and even ticking up in the last few reports. That's basically double the Fed's target. We have the Fed saying that the dot plot is being pushed out, rates will stay higher for longer. We have bond yields astronomical, almost unprecedented. And this is, there's an enormous amount of money essentially sitting on the sidelines. And this is, we're seeing this now in precious metals, at least on the gold side. Gold, obviously, setting all-time records. Gold prices are at all-time records in virtually every currency, and maybe 2 or 3% off in US dollars. And now we have gold to S&P 500 is breaking out. Silver to S&P 500 also breaking out. So I guess the question often is, just give us a kind of a sense of where silver is at in this current environment.
So one way to gauge things is you look at the gold to silver ratio. That's still quite high. I think we're around 87 or so right now, historically high. And silver is just being undervalued, underappreciated. Of course, the big question is, when will that change? I think that you see gold break out, and then you'll start to see silver follow quite quickly after that. There are a lot of sort of technical levels that silver can start to break through. But when you see the ratio drop back down through 80, that's very bullish. And it's in fact bullish for both metals. It tends to be bullish for not just silver, but also gold. So that's something that we're looking forward to. And you know, when you start to see silver, let's say, go through 25, 27, 30, and then especially beyond 30, then things will get really exciting.
And why is that? What is it that happens? Is it the vote of confidence in silver makes people believe in the broader precious metals market as a whole? Or is it is it that when silver takes off, it's kind of a proof in gold as well?
I believe it's more the latter. I think that, well, you certainly have a lot of industrial demand that we can get into. But if you look at more sort of the investment side and the FOMO aspect, the fear of missing out, when it's often gold that's going to start running, and then people will look for cheaper options or alternatives. Silver is the obvious first go-to, and silver starts to tend to play catch up right after that. So you see gold kind of move first, and then silver starts to move quickly and moves more quickly, and that's when you start to see that ratio come down. And it's absolutely a vote of confidence for the entire precious metals space.
Now, I wanted to ask you also about, about some of the structural changes on both sides. So, on the gold side, so you're saying that this level of 80 is kind of a trigger, where this is historically when you would expect to see silver start to take off. This is also good for gold. So this is when precious metals start to really take off, and silver playing catch up. That's the right time to be in silver. But we have some things that have changed fundamentally on the gold side. We have sustained central bank buying like never before. We have gold prices weathering surprising headwinds. So we have extremely high rates, and we have gold hovering near all-time highs in an environment where it should be much weaker. We have all kinds of analysis coming out that says gold based on yields, gold based on a number of factors, ought to be $250, $300 at least cheaper, and yet here we are. So on the gold side. Then on the silver side, we have this massive build out in solar, and we'll get into the details of that. You have some new numbers for us there as well, which presumably update the projections. But what is this 80 line? Is that still the line? Is anyone trying, or are you trying to figure out where the gold silver ratio is really telling us that the breakout is coming? Because you could have say it could happen at a higher level if gold is just that much stronger. It could happen at a lower level if silver is if the industrial demand for silver based on solar is much higher. So is that 80 still the line?
I would say yes. You know, what we can go by is history, and then as time passes, we'll see if there have been changes, you know, to sort of paradigm shifts in how these metals react with each other, price-wise. But I would say that if you go based on history, 80 has tended to be, and it's not an exact number, but if you look over the last sort of maybe 20, 30, 40 years, 80 has tended to be the level at which you see the ratio peak. So if it could, obviously, it has peaked higher. It's currently still higher. And so once it starts to break through, we'll look back and we'll say, of course, it peaked around 87, say 88, 90 or so. But this level of somewhere near 80 is where it does tend to peak. And so that's what we look for. It's a little bit like if you look at technical analysis and you look at the RSI, which is a momentum indicator for stocks, for all sorts of things, commodities, etc. How the price is, how bullish the price action is. So in the RSI, as a technical indicator, you look for anything, say, below 30, and then a move up from below 30 as bullish. And if you see the the RSI over 70 and to start to dip below 70, then you know, well, above 70, you're overbought. And then once it dips below 70, you can pretty much expect if that continues, then you're kind of in a downward trend. So this is in the opposite direction, but it's a similar way to look at it.
All right. And then we also have, which ought to be supporting silver prices in that environment, when people start getting back into silver, they're going to run straight into a brick wall of a structural deficit. So what are the latest projections for this structural deficit on the supply side?
So if you look at the last 3 years, 2020 was a surplus of 50 million ounces. That's the last one so far. 2021 was a deficit of 50 million ounces. Last year was a deficit of 237 million ounces. So in the last 3 years, it had a swing of over 300 million ounces from surplus to deficit. This year, the forecast so far has been, it ranges depending who you look at, but around 140 million ounces. We're going to probably get updated numbers in about 2 weeks from the Silver Institute. My feeling is that they're going to revise that to probably somewhere closer to 160 from 140. My target is closer to between 160 and 180 million ounce deficit for this year. And so, of course, again, time will tell us exactly what those numbers are. But if you look at what's been happening, especially in solar, I think that's driving a lot of this structural deficit. So we can talk about perhaps what's going on there to help understand that better.
Absolutely. So this is the kind of the rock and the hard place. Absolutely. In a way, because you have this structural deficit that's only going up while the price is not skyrocketing. Now you have the latest projection from the IEA is that solar will be the top power source in 2027. So they're saying it will be the #1 source of electricity around the world.
Exactly.
By 2027, which is very soon. So a lot of the projections we've been seeing are 2030, maybe even further out, for solar demand, for silver demand as well. Now, it seems like the deficits are going up, and the time frame for how much solar we're going to need to build, or how much solar, this is more of a projection of how much solar will be built. Absolutely. Because this isn't about how much silver we're going to need to build out a projected build. This is that it will have achieved #1 status as a source of electricity. So what does that mean? How do you fit that 2027 number into all the numbers we already know about the rate that things are being built, the demand for silver, and especially against the backdrop of that type of a structural deficit?
So assuming we do achieve those numbers by 2027, so solar being the top power source globally, it'll have surpassed coal and it'll have surpassed natural gas. So that really is quite a big deal. And so the silver has to come from somewhere. And so not only, are these numbers impressive and likely to really impact the amount of silver that we're going to require, but what's happening in tandem with this is that you have these new technologies that are coming online for solar panels. You've got essentially three technologies right now, PERC, HJT, and TopCon. PERC is the more common one. The HJT and TopCon are these new technologies. HJT, not sure I've got them in the right order. I believe TopCon is 50% more silver per panel, and HJT is 150% more silver per solar panel. So now you've got this consultancy, Rystad Energy, who is forecasting that by this year, these two technologies are going to represent 35% of global solar panel manufacturing capacity, whereas just 3 years ago, they were 10%. So the growth in these technologies to produce solar panels is just ballooning. And so the amount of silver required to make the solar panels is just going to have to follow on that. So you ask yourself, why are we producing solar panels with these technologies if they require that much more silver? They're going to be more costly. The economics bear it out because they produce more energy, very simply. So even though the cost is higher because you're consuming more silver, you produce more energy. So the numbers just justify it.
And that's the way the energy industry works.
Absolutely.
They're always happy to spend a higher one-time investment to gain
a greater
10%,
output.
5%. Even a small percentage of higher output is so much more valuable in the long term.
That's right.
It's worth spending the money.
Exactly.
And we're seeing that in nuclear too, I guess.
Absolutely.
All right. And then, so then, which of these numbers, because these are such dramatic numbers. You have a structural deficit that's ballooning. You have enormous demand based on projections of solar build-out. Now you have a projection that solar will actually be delivering by 2027
right.
as number one. Which of these numbers are not being taken into account? Because if you put all these numbers side by side,
Right.
then why would we even be waiting for a gold-silver ratio barrier? Why would we be waiting for a threshold? These numbers alone ought to justify a much higher. Silver, in other words, ought to decouple from gold
Right.
and simply act as like the way uranium prices
Right.
react when the nuclear builds out.
Right.
This is an energy metal.
Exactly.
If silver is an energy metal, then which of these projections, is it for example, the evolving technology that is
Right.
simply not being taken into account? Something here must not be reflected in the market
Right.
for prices to be where they are. What do you think that might be?
Well, there's something called a stock to flow ratio, and if you look at that with gold and you look at it with silver, it's the amount of silver produced every year versus the amount that is in inventories. So for gold, it's very low. So that justifies a higher price essentially overall. So with silver, you produce every year a relatively high number for the amount that's in inventory. So the market looks at that and says, okay, well, each year we're going to be able to more or less supply what we need from mining, right? And so that is one way to look at it. I think that silver is a more volatile metal. There is more, as I say, there is more inventory. You could argue that as demand goes up, and this is only for a certain amount of time and to a certain extent, that some of that demand can be supplied from inventory. We can expect that to happen to a certain extent. Some of that can come from ETFs, it can come from stockpiles, but really those are relatively limited. And given these numbers and given the kind of growth in demand, I would expect that not to be able to be sustained for very long. The market's going to have to come to reality with the amount of silver supply. And so I believe that we're going to get to points in the market where we're going to see large jumps in the silver price when that reality hits home and it starts to really move very quickly, much higher very quickly.
But this is also a little bit puzzling because the sense I'm getting is that silver is still being treated as a precious metal, as an investment metal, as the little brother and the kind of tagging along, catching up, wait for me, younger sibling of gold. Whereas all of this is telling us, for example, you're saying, this burgeoning demand will be filled from inventories. But we know the inventories are limited, exactly. And we know that the structural deficits from mining are only growing. So how is that the only? I'm trying to make it make sense in a way. I'm trying to understand why the market can know all of this and the price can still be this low. Because this doesn't happen. This doesn't seem to be happening on the gold side.
Right.
When something materially impacts demand for gold, we've seen gold prices get high and stay stubbornly high in the face of very, very, very significant headwinds, which historically ought to keep gold prices much, much lower. So when we see sustained buying from China, when we see de-dollarization and central banks around the world, not just China, but very much China, when we see supply going offline from countries like Russia or getting funneled through a bit of a roundabout, a little bit more complicated, but at the end of the day, gold is more expensive, there's less supply, demand is strong, and the gold price doesn't seem to care that bond yields are over 5%.
Exactly.
Why, or I guess when is the question, when will silver begin to reflect these kinds of, when will silver's price begin to be sensitive to these kinds of fundamental drivers as opposed to investment demand and fund flows?
So the first thing I would say is the market's not always right. Ask Warren Buffett. And that's why he's been able to build a fortune, because he's exploited the inefficiencies in the market. And so I think that people who understand and believe in silver and look at what it has been historically, both industrially, and that's growing, of course, that portion of demand, but also as a monetary asset and an inflation hedge, they are willing to be patient and they understand the market. And all of these items that you mentioned, all of these demand sources, both industrially and both as a monetary metal investment, will be reflected. So I believe people have to be patient and they will be rewarded. We've seen what silver has done a couple of times in the last several decades. It's reached $50 in 1980, reached almost $50 again in 2011. And it tends to lag gold, but then it outperforms it. And we've seen that almost every single time that we're in a bull market for precious metals, silver outperforms gold. So it requires patience, but it tends to be rewarded.
And then the last thing I wanted to get a sense from you, because we've looked at this industrial demand side. So we have the structural deficit and we have the industrial demand going up. What could part of this be that everyone is waiting to see if we will have a recession? Because, in other words, what I'm trying to understand is how robust or how secure are these projections for the build out on the solar side? How much of this build out is driven by government money, which is kind of like the interstate highway system? You build it out during the Depression. So obviously, and we saw this with the Biden administration's massive spending bills, they would very much like to invest in solar, especially if no one else is doing it. So they're not going to follow the market. They're willing to spend when no one else is.
They're almost going to be the market.
Exactly. So right. What I'm trying to understand is, if we do enter a recession, say, how much of that build out for solar will be successful supported by government spending versus everybody just reverting to cheaper sources in the short term and waiting for it to be over? How elastic is that build out? How sensitive will it be to lower industrial demand on the private side?
Right. So that's a great point, and I do agree that there is some risk that we could see a little bit of softening in demand, sort of on the more private side, because people will be tending to spend less, they'll be more cautious, etc. But there is this all of the demand side, or the support from the government globally is mandated. And so, as we've seen with recent caving on the carbon tax in Canada here, there can be changes in that direction, for example. But I think that because most of that really is mandated by government, I'd see that to be tempered really considerably. The risk of a lot of these projections not necessarily being achieved. If I had to put a probability, I would say, or a target, I'd say, if you look, say, 5 years out, for example, maybe you won't be at 100% of these projections, but maybe you'll be at 80 or 85%. That's still going to be a whole lot of demand for silver and solar, for example. So I see that being tempered a lot by the push. When you have recessions, look at what happened during COVID, look at what happened during the financial crisis. Going green became a really big thing, and it became acceptable, not just acceptable, but even popular. And so I think that government will do anything that's popular. And I believe that will continue to be supported, and that, for me, at least bodes well for this whole sector.
All right, well, it looks like we have a lot lining up, and every time I speak to you, the projections, the time frames get sooner. and the projections get only higher. So I guess the only question is when. So I guess my final question to you would be to do your best and give us a sense of when you think, whether it's the gold price, the gold-silver ratio, whether it's a certain price threshold for silver itself, when do you think we could begin to see that? When do you think we could begin to see silver begin to play catch-up? Is it a level that gold has to reach or has to maintain before we start to see that move?
I think that silver will follow gold. So once you see gold break through, say, $2,100 or so, I think you're going to see a lot of buying start to happen. A lot of the market, people who are not necessarily precious metals followers or investors, will start to get very interested, and that'll feed the demand for gold. And then you'll start to see retail pay more attention, and they'll look at alternatives to gold. Silver, again, is that natural, obvious alternative, being so much cheaper on a per ounce basis. And so I think that's when you really start to see silver catch up. You start to see these important price levels, the psychological levels, 2050, 2100, and then beyond that in gold, silver prices really will start to kick in. You could start to see 25s, 27, 28, $30 in silver. And I think, as I say, beyond 30, we're going to see silver start to run pretty tremendously.
All right. Well, thank you so much for taking the time to talk to us today, Peter. Always a pleasure.
Same here. Thank you.
And we're going to keep a close eye on these indicators and for updated projections, and we'll have to circle back with you when those come out.
Look forward to it. Thanks, Ernest.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more coverage from Xplor 2023 in Montreal.
Kitco Mining's special coverage of Xplor 2023 is brought to you by Radisson Mining Resources.